What I think is crazy here is what I'm calling the incremental gross margin opportunity. They don't need to hit full self-driving for the financial impact of this technology and this software to be massive for Tesla. I think this is what the market is starting to appreciate. I think this is what I've been starting to appreciate more and more, is like, this isn't niche. Almost, it looks like a huge portion of the customers are opting for this package, and they continue to raise the price for this package. So let's just take the Model Y for an example here. As you can see, the starting price is $52,990 long-range Model Y. The cost of that vehicle, let's say, is $45,000. Now the profit from that, $7,990, 15% gross margin. Now here's a look at what Tesla's gross margin has been over time. As you can see, pretty consistent, 15 to 20%, sort of going down as they've started to ramp the Model 3 and Model Y production. Annually, it has peaked in 2014, gone down as they've sort of dropped the price of their vehicles, computers on wheels. Tesla's units have gone up, but the average selling price has gone down. That's pressured gross margin. But I think that's all about to change. And we've already seen that strength in Q1. And I think, Tesla's not really selling cheaper cars now. It's sort of hit that bottom price point with the Model 3 and the Model Y. And as they hit more economies of scale, more pieces of software sort of becoming a part of that ASP, I think the gross margin overall for Tesla as a company, this chart is looking really, really strong and is about to totally U-turn and justify massive higher profitability per car sold and per dollar of revenue than anything we've ever seen in the automotive industry. And that's why the valuation is looking so out of whack with these legacy car companies. So let's dive into this comparison. That's with no FSD. If that, owner gets FSD, just to illustrate how transformative this is, the car costs $60,990. That's with the assuming $8,000 current dollar FSD price. Still costs $45,000. You remember, the car that they sold without FSD still has all the sensors. It still has, all the hardware necessary. Still has that Tesla full self-driving computer. And this is a funny example of like Tesla has probably 500,000, 800,000 cars on the road without full self-driving that are all driving around. So even if you don't get full self-driving when you buy the car, you can always upgrade to it in the Tesla store on the app later. So all of these cars driving around are another massive untapped revenue opportunity for this software as Tesla rolls out the functionality. But anyway, that's getting sidetracked. The point here is every car Tesla sells off the production line, whether you have FSD or not, has the hardware necessary to make it drive itself. You just need that software update and unlocking it at Tesla HQ. Beautiful computer on wheels. So the COGS here is still $45,000. Then the profit from this new car with FSD is $15,990. That puts the gross margin at 26.2%. Now let's compare this to the no FSD side by side. You can see the profit per car doubles. Even though we've only sold that car from 53 grand to 61 grand, Tesla's profit doubled. All of that, incremental full self-driving revenue is so high gross margin. They've already paid for it. It goes right to the bottom line. And it's going to be a massive needle mover for the profitability per car sold for Tesla. Now let's play this out because like I said, Tesla, it's only 8,000 today. We've already shown how as it keeps improving, Tesla will be able to keep justifying and raising that price. Let's say it doubles to 16,000. The price goes to 68, 69,000 for the Model Y, COGS still 45,000, profit goes to 24,000 per car, 34.8% gross margin. All of a sudden we've seen a tripling in the profit per car. Let's go one step further and say they hit $30,000 in FSD. That would change the price to $83,000 to consumers. COGS still $45,000, $37,000 or $38,000 in profit per car, 46% gross margin, gross profit per car plus 375%, almost a quintuple in profitability per car when FSD hits 30,000. So, I don't know when this is going to happen. It's going to take a while for Tesla to slowly ramp up the price here. But, this is the slow before our eyes transformation we're seeing of Tesla becoming one of the most profitable car companies of all time as this software, AI driver becomes a bigger and bigger piece of the value proposition. And so tying this all together, my theory in the long run is Tesla's gross margin has probably bottomed in 2019. And, there's other things going into here, the energy business. Tesla doesn't just sell cars, but this is the bulk of their company. And I think the structural gross margin of that automotive business is going to start trending back upwards, back to the mids, high 20% range eventually in the next couple years, depending on how this all unfolds, because of the full self-driving package. And this is a huge, huge needle mover for profitability. Tesla's already a profitable car company. We've seen them continually, massive opportunity to grow revenue, but growing per car profits is another huge lever as well that is really coming to fruition here in the past couple quarters.